Let's bring in Brent Thill, Jefferies senior technology analyst. Brent, I'm not so sure about just the whole term cloud anymore because, I mean, these are enterprise software companies, most of them, but Intuit's base isn't even in the enterprise. Some of them are, infrastructure leaning. Some of them are applications leaning. What's really happening in this group, and where do you see the most potential?
Yeah, I mean, I think we're still transitioning to the public cloud, John. I mean, 20% of workloads are in the public cloud, and we still have a long way to go. I think many of these companies have described themselves as cloud stocks when they're really disguised as true enterprise names, to your point. So I think overall, look, the software industry is under massive duress. We've seen multiples contract from a high of high teens to now mid-single digit multiples on forward revenue. In past recessions, we've seen multiples go as low as 3 times. So we still have a long way to go. And if you look at companies like Snowflake, Cloudflare, Datadog, they still have huge multiples that still can compress further. So we're tactically cautious because we think ultimately if we go into a recession, all these companies have to lower numbers inevitably, and that could happen in the back half of the year. Most of our large investors are waiting to buy these stocks until the fall or early next year to really understand the shape of the curve of what happens with the global macro picture. So right now, Friday's action was just really a hedge fund covering of shorts. There's not a lot of long only demand. We got to see the long onlys come back. But we're positive over time. Well, just short term, it's hard to be super bullish.
Let me ask you about a couple of names I know you're watching, Procore and Smartsheet. I've spoken with both CEOs in some depth over the last couple of weeks. Both have market caps around $5-6 billion. They're the type of stock that's going to get overlooked in this market. I think Procore's down like 5% today. One focused in construction and the cloud there. Another focused in productivity software, which is an area a lot of people would think Microsoft has solved, but they've carved out a niche. How do you evaluate the potential of those types of companies in this type of market?
Procore is a phenomenally run story for the construction industry. Really like the management team and their fundamental position. I think the short-term concern is the interest rate hangover on construction. So our building's going to get built, our things are going to get stalled because rates went higher. So they're living with that headwind. We think construction starts and what's happening in the industry will far exceed the weight of the interest rate issues. So fundamentally, they're in a great shape. Smartsheet, has been a real disappointing story. They've been, good house in a bad neighborhood with Asana, Smartsheet, Monday.com, all bringing their valuation down. They're executing very well. Valuations very reasonable, and they help companies collaborate on everything that they do, from concerts all the way through, just basic business processes. We really like the team and think, again, that's a great long-term story that's positioned well where the valuations come off.
We got like 20 seconds left, but Brent, Elon Musk just tweeted a poop emoji at Twitter's CEO. You think that deal's going to happen?
I think he wants it. There's no way he puts all those bullish arguments on and does what he does to not want it. He just wants a lower price. That's all it is.
Well, we'll see if Tesla investors want it, because more and more that's an issue as that stock is trading in the 700s. Brent Thill, thank you.